All right, let's talk about one of the biggest pieces of financial advice out there. We're going to dig into the idea of the property ladder and ask a really important question. What if it's not a ladder at all, but actually a trap?
You know the drill, right? For as long as we can remember, we've been told there's this one golden rule, one absolute must-do first step if you want to build wealth and get ahead financially. And what is that rule? Yep, buy a starter home. Get your foot on that property ladder as early as you possibly can. It's been financial gospel for decades.
But here's the thing. What if that advice is just wrong now? What if, in today's world, that first step is actually a huge leap backward? Let's break down why that might be true.
I mean, you get the appeal, don't you? The whole promise is incredibly tempting. You buy a small place, you build up some equity, and then a few years down the road, you trade up for something bigger. It's sold to us as the surefire path to a secure future.
Okay, but let's start pulling back the curtain on this, starting with the first huge problem, the transaction cost trap. This is basically all the money that just vanishes into thin air the second you try to sell.
So what exactly are transaction costs? Well, it's all the fees that just pile on top of each other. We're talking realtor commissions, all those closing fees, and of course, all the money you have to spend just to get the house ready to sell.
So how much are we talking about here? This is where it gets pretty shocking. For homes that are sold after only a few years, these fees can gobble up as much as 70% of whatever profit you thought you made. Let that sink in. 70%. And this chart just lays it out perfectly. You see your home's value shoot up and you're thinking, wow, I've made a killing. But the reality is that a massive slice of that pie, that 70%, goes straight into other people's pockets, not yours.
So that's the first trap, but it doesn't stop there. Next up, we have what you could call the unseen financial bleeds. These are those awful, expensive surprises that nobody ever really warns you about when you're signing the papers.
And we're not talking about small stuff. We're talking about huge, budget-destroying catastrophes. Your furnace dies in the dead of winter. The roof springs a leak. A major pipe bursts. When you're renting, you just make a phone call. When you own, that's all on you.
And here's the real danger. These costs can stack up so high so fast that you can actually end up underwater. That's a terrifying place to be, where you owe more on your mortgage than the house is even worth.
And the third trap is something a lot of people are feeling right now. It's the mortgage rate prison. This is the bizarre situation where that great deal you got on your starter home is the very thing keeping you from moving on.
Here's how this prison works. You've got your starter home with a nice, manageable mortgage at a super low interest rate you got a few years ago. But now you want to trade up to your forever home. The problem? Today's interest rates are way higher, which can make the new monthly payment completely crippling. You're effectively trapped by your own good deal.
Okay, so if that traditional path is so full of traps, what's the alternative? Well, there's a totally different strategy to think about. It's one that's all about renting, investing, and most importantly, flexibility.
The whole idea is actually pretty simple. First, you just rent for longer. You completely avoid all those traps we just talked about. Second, you take that big chunk of cash you would have used for a down payment and invest it instead, maybe in something like a broad index fund. So what's so great about the strategy? Well, three big things. One, you have more liquidity. That's just a fancy way of saying your cash isn't locked up in a house. Two, you have the potential for much higher returns from the market. And three, you have way more flexibility to move for a job or just a change of scenery without getting hammered by selling costs.
Let's just put them side by side. With the starter home, you might be equity rich, but your cash is stuck, your potential profit gets eaten by fees, and your flexibility is low. With the rent and invest plan, your money is available, your potential returns are higher, and you have all the flexibility in the world. The difference is pretty clear.
So the single most important takeaway from all this is that a starter home is no longer the guaranteed wealth creator it used to be. In fact, for a lot of people, it can turn into a wealth destroyer that just traps your money and your life. And that leaves us with one final thing to think about. We're always told that owning a home is the ultimate form of freedom. But if you're equity rich but cash stuck, unable to move, unable to invest, unable to take a chance, is that really freedom?